Day trading is the most popular trading approach for retail traders because, well, it seems really tempting to trade if you are in 100% of control of your trading day, and I would say your financial destiny, because you could open your trades, you could close your trades, and at the end of each session you are practically safe because you don't have any overnight nightmares. And at the same time, if you could make 10 to 15 trades per day, and if each of these trades, or even the most of these trades, are making you like $10 to $20, it's not that hard to calculate that your yearly income might be quite significant. But is it so? Well, actually, if you look at this from other perspective, well, most of the retail traders lose money, and almost every one of them uses day trading as of their approach. So the initial idea of day trading goes into, I would say, complete opposite of real trading statistics. So my question here is that a problem of day trading, or is this a problem of traders? Well, let's examine this and look at a couple of practical examples. First issue here is that absolute majority of day traders don't have clue how to calculate their trading strategies and their trading histories. For most of the time, they are buying some sort of useless trading software or signals, or simply lying themselves by seeing only profitable trades and ignoring the times when these setups didn't work. So they are seeing that they have string of small income or small profits, because most of the time trading strategies are made in a way that they have like 80% of the winning time of the time. This is the largest delusion of trading. And they believe that those 10, 20, $30 will make them fortune. But what happens? Usually what happens with novice traders is that they're making those steady gains, and then they have like one or two huge losses which wipe out their capital. So in retrospect, average day traders trading statistic might be like that. They have 80% winners, 20% losers. Most of the 80% winners are 20 $30 of profits, and it goes for weeks like that. And then they have one huge loss which wipes out their capital. But what traders should do is they should trade in reverse. They should have lots of small losses, and most of their trades should be unprofitable. Yes, unprofitable. But then they have to have few extremely good winners which will make their fortunes. This requires completely different mindset, but it works either whether you apply this to day trading or to long-term positional trading. So have small losses and huge profits, and do not bother about probability, how much your profitable on and unprofitable trades are in overall statistics. You could have 9 trades out of 10 which are losers, and it would work if that one winner will be significantly larger than other losers. So think of these kinds of probabilities rather than simply go and try to be right all the time. That's one thing. Second thing is that traders think that markets are somehow fitted to their own schedule. It's not. It's one of the largest nonsense in trading to think that you could work at the time frames which are fitting for you. It works only if you are holding trades for weeks or months, because then you simply could place your trades or once or twice per day, and it wouldn't matter whether this is like 12 a.m. or afternoon. So it wouldn't matter because you're still holding for your trades for months, and small price differences wouldn't make a difference. But if you are day trading, it's nonsense to think that you have to have your trading opportunities from 10 a.m. to 4 p.m. If someone tells you like that, that's sheer nonsense. It wouldn't work like that. Markets have their own rhythm, and your trading opportunities might be at the time when you are sleeping, washing your teeth, or doing your daily errands. So probably let's check out Bitcoin market and see, for instance, with one simple moving average trading method. I use this method all the time because it works, and I will just show you how different trade entries are. For instance, if we want to trade simply on this moving average, we have to buy it or sell it when it's above or below moving average. So you saw here is a wonderful trading opportunity if you went short at 29th of September at 23 or 11 p.m. So previous trade was done when it was 5:15 a.m. at September 26th. Here trade was done when it was 19:15 or 7:15 p.m. And here Opportunity arose when it was afternoon or 14, depending on way how you calculate clock. It was 2 a.m. or 14 hours. So here's my thing: is those good trades happen regardless of what are you doing, because well, if you were not at 11 at evening behind your screen, you might miss wonderful opportunity to short Bitcoin from $65,000 to $61,000. Let's see for some other good trade. Yes, here was at afternoon. You have to be at 2:30 p.m. behind your screen, and then you will be able to short Bitcoin for $63,000, $700 to $58,000. So completely different days, completely different times, but opportunities show themselves when they show themselves. You don't know that, and that's the definition of trading. So first things first, if you don't want to be a complete loser in day trading, watch at least these two factors. Understand that you have to have both winners and losers. And do not think about percentages, how many times you're right, but how much you're making when you are right and how much you're losing when you're wrong. So trading strategy which has 90% profit rate doesn't mean a thing if that 10% losses are larger than your profits, and vice versa. You could have been trading and being wrong 9 times out of the 10, but if that one time you are right, you could be making far more money. So this is one thing that day traders miss all the time. And second thing is that if you want to day trade, make sure you have to sit behind the screen when you have market opportunities, not when you want it. And this is actually really difficult to pull that off. And I would say this is the problem with day trading. Not that there is no money making opportunities, but it's so damn difficult to explore them all the time, especially if you trade multiple markets. And then your price execution should be good. So avoid illiquid markets, avoid bad brokers. Otherwise, you will be paying way more to your broker than you are making for yourself, because price inefficiencies and costs due to the commission will eat up most of your profit here. So also, if you have string of small profits, you will see that those small profits are actually larger for your broker to the commissions that you pay him than you are actually making for yourself. And this is the third thing: watch your commissions and costs. So the less you are paying in the form of commissions, the better for you. And do not compete with large players. So do not try to take news trading in the way that you could be simply just watching the news and making the money in the same direction with that news event. Institutional traders trade in a similar way, but believe me, they have way better price execution than you do. So here's the approach. Unfortunately, you have to sit behind the screen a lot of time if you want to day trade. Have the strategy where your losses are small. For instance, you could have countless of losses here when trades are ranging, and then one huge profit, which is far better than all of these losses combined. Secondly, and trade with good price execution with best broker. Then there is no bad stigma for day trading. It's just approach of the day trading, but that usually doesn't work. That is what makes it bad name. So day trading done correctly could give you some profits, but here's the way how to do it. But of course, if you want to do this professionally, work with me. I have copy trading offers for free. I have good trading courses and I have individual trading mentorships. So if you want to elevate your trading game, make sure you are joining me and let's work together and let's make money together with trading, because opportunities here are endless.